Good evening, Ken at Tortoise Capital. This is the nightly strategy podcast for Monday, December 7th, 2020, a day which will live in infamy. I want to start with the daily health check here. All right, so let's see what we have here. I'm noticing that we have from Friday, the 10-day, 30-day, and all-time high was made, and that today was a nice, tight little doji and inside day that also opened and closed where it started. So just a fractional down, and it closed right on the baby dragon and above the skin of the dragon, which is a fraction above the Z1 score. I'm feeling how long we've had this PSAR stop in place. That's 5, 10, 15, 20 days of uninterrupted PSAR trend, which flipped right here after this big sell-off. So one of the things that you are kind of always judging is, the timing of your indicators with respect to prices. And so is this turning point here, was that soon enough? And did it keep you in a trend long enough to take advantage of the trend? I would say so. The point of interest is what happens in here when this declining PSAR, which is this is a counter trend move because the previous trend was really strong up. The counter trend move was shorter, and so that was only like 8 or 9 dots, whereas this is already 20 days and still cooking. So what you get is that rebound from oversold conditions in a bull happened in 2 bars. And so if you wait for this PSAR dot to flip, you run the risk of missing that nice chunk, and you're already above the hump of the dragon, and you're doggone near the hump of the RL30. So you miss the opportunity for the pocket trade inside here. Okay. So one of the reasons we look at we've been looking at this when you're into this thing and the PSAR is trickling down. One of the things that we've noticed is that if you have an entry here, like a 2-dot lag, if you will, when this bar here was open, then that was the working PSAR dot right there, right? Because you don't get this PSAR dot here drawn until this thing closes, but by that time it's already this far above that level. So when we talk about that trailing PSAR entry, that idea is that if this is the most recent closed PSAR, that we have been drawing a line here and saying, you know what, in case of emergency, break glass. So if this thing has an unbelievable move 1 and move 2, that trailing PSAR dot is prepared to get you in right here at that bright red dot instead of up in here. And the reason that's interesting is because, if your stop is down here, and that's your risk box, if you can get an entry here instead of here, that's almost half of an execution risk, depending on if you got in right here or you ended up getting stuck up there. So the idea behind if I can just clean that up a little bit there. The idea behind this I think of it as a trailing PSAR entry, right? I should probably make that green to show that that's actually a trailing entry. The idea there is that if you do get a sharp rally like this, where in retrospect you would want to have entered somewhere in this pocket created by the bend in the dragon, and before the top of that dragon, this area in here is precisely what we call the pocket. So the workaround that we have on this is that while I'm very satisfied with the way the PSAR formula lets us enjoy 20 days of what has turned out to be a pretty nice trend. That in order to give that room to work, you have that initial PSAR when it flips is way down here by the RL10, and that could create maybe an unnecessarily large initial risk. And so the idea of this, of having a descending trailing entry, I should say, is precisely for this kind of move where you get this series of explosive moves right off the bat to reverse the counter trend. And that's the idea behind this trailing PSAR entry that we have talked about. Okay. So I just wanted to point out why that's a thing. You know, later on when that trend is unfolding in the usual way, you'll notice that this has more of a grinding flavor to it, whereas this move off that swing low bottom was just a rocket ship ride to the top. Now it so happens that coincides, if I remember, with the election. Yeah, there was some election time frame in there. So I just wanted to make that point before I forgot. So we're 20 days into this PSAR moving in the same direction, and now you'll notice that the PSAR is kind of a relentless mover. Every day it just moves up its limit of advance, we call that. And now the distance between the price action and the PSAR stop is relatively small compared to where that was back here when the PSAR first flipped. And so to account for that, what can be a really sharp move, that's what the idea of this trailing PSAR is there. Because when we talk about the SSC, we really want to see that supported spring crossing. We want to see that PSAR dot flip from here on the upside and flip back down to the bottom side to indicate that, the trend could now be up. It's in this early stages that we have to be, we might want to be a little more artful. So that's the lesson there. Okay. So back to business here. So our 10-day low is here. So tomorrow that 10-day low is now going to move up into here at approximately 360. And that's going to be in place for a while. So there will be sort of a raising of the bar on the 10-day low. That acts like a squeeze play to try to push this higher, right? Or to lock in, it locks in that much more of the move. We have an inside day here, but there was no real sign of harsh sell-off. The dragon is riding right along the edge of the river, so this is not an extraordinary move yet. It's a strong, steady move in between Z1 and Z2 the whole way up. So this is not a runaway parabolic move yet. This is like a freight train chugging across the nation here with lower volatility, only 1% a day, and continuing to drive on until otherwise noted. So it has not yet gotten parabolic in the broad market. Tomorrow the PSAR moves up to 361.5. Price is still locked in between. Price is still locked in nice between Z1 and Z2. So this is a good solid B slope. To me, when it gets up here near Z2, like this little piece, that feels like an A trade in terms of steepness. But now that we're back here closer to Z1, this feels like a B trade. So it's not overheated. I actually kind of prefer a B and just let it keep chugging along like that indefinitely. And then periodically you get these surges up with a retracement and then this nice steady play. I actually like the steady play personally. I find it's a little easier. It feels like business as normal. Like if it were to get back down here in between the PSAR and Z1, I would call that a C. And then if this thing rolled over so far that it was down in here below the PSAR dot, well, then it'd be a D. So I would look at this as kind of an A. We're in a B category of strength. We are, less than 1% of a sell-off from the all-time high. Here's 2.5%. There's about 5%, and that's what 10% feels like. 10% all the way back here. That's a pretty good move in 20 days. When Buffett says if you can get 5% per year, that's good. Here's 10% in 20 days. So this is not to be sniffed at. This is good stuff. I see after this nice big sell-off here, I see this as leg 1 and leg 2. And today was a bit of a stall, so now we're going to see, are we going to get a leg 3, or is it going to pull back? So this is where it now makes sense to study where our stop should be. And just on an index basis, with this nice set of rising lows in the doji, I think a 2-day low is reasonable, which is also the peak of the dragon. So I would call that 366.6. The Z1, the bottom skin of the dragon, the PSAR today and the PSAR tomorrow. So somewhere in here, if you're a swing trader, one of these price levels is a reasonable place to be peeling off positions. Now, whether that's all out or whether you take half or whatever, where I feel like right now is because we are solidly 2 legs up, and today was minus 0.5 in percent in the S&P. I kind of like that. I kind of like that 2-day low, or the skin of the dragon. But I could live with the bottom of the dragon. If you give it the bottom of the dragon, you're giving it about 2% of market's money to make the play. If you're at the top of the dragon, you're giving it about 1%. So, you know your risk tolerance best. So that's that. But all systems go. If this breaks out above this 10-day high and 30-day high, which is just a fraction away. There's no resistance above until we get to the statistical Z2, which is, 378. That's like 3% to the upside, and no resistance. So we could very easily see a move like this, or a move like that, where you're getting $2 or $3 on one shot. Okay. All right, let's go to the, where are we at here? There we go. Okay, so, snag, it has crashed. Pardon me. Well, let me let Snagit finish crashing here. We'll be back in a half a second. Let me stop the recording for just a